Always.
Hello, everybody, and welcome to a Friday Market Update edition with me, your host, Jacob Jennings, here at Investor Party. We are going to have a good time today as people start to filter in here. Brian Yen is going to be coming on, talking to us about tax liens and deeds. And Emily Neary just sent me a text message. She was also supposed to be here. She'll be right here. She had to restart her computer. That works. Let's see. So who else is here right now? Blah, blah, blah. Where are we? Oh, good. Max, Michael, and Hector. I know that Liz is there too. Wonderful. So how are you guys doing with everything so far? How are you doing with your investing lately with everything adjusting?
Just got off the phone with somebody calling me back on a voicemail. So
Okay, good.
he's got a condo he's looking to sell. He just did some remodeling to it, and so I'm putting all that in Podio right now, and you know, getting people to call back. That's always pretty good.
That's awesome. So you got to call back. You wouldn't know until then. Where's the condo located?
It's in Dallas. Guy lives in California here, but the condo's in Dallas.
Condos in Dallas. Okay, and so they're already doing some remodeling to it?
Yeah, so they just finished up putting some new floors in. What else did he tell me here? New carpet, I think, in the master. Yeah, vacant currently, looking to relist it.
Perfect. So we could do a couple things. It does not sound like it's an investment property, but Anita and Sam are agents, so it'd be a great thing for them to go ahead and list, right? So again, it's another way of leveraging your team so that everybody wins. You know what I mean? So,
right.
Just cracked me up. So come say hi. So Bo's been over here. We've been working on how to analyze the market lately. Say hey.
Hi, everybody.
So what have you learned so far?
It's a lot of work.
It is a lot of work. It's a lot more work than people expect. But what are you taking away right now? What are you going to work on?
I'll learn on looking at mobile homes and homes that are for sale in markets, finding hotspots, and getting information from the homeowners or the realtors. Yeah. Making phone calls. Made one today. They actually went into contract, but then she said she's got another one coming on the market on Monday, and she might give me some information before, so we'll see what happens.
Was it painful?
No.
Did it hurt?
And he said I sound unprofessional, so I guess it works.
It was surprising. He sounds more professional than I do, that's for sure.
Nah, don't go that far. All right, my dear. I'm gonna head out. See you in 2 weeks?
Yep.
Okay.
So, watch your videos. So.
Yeah, I will. I got you.
So anyway, hello everybody, starting to come on. I love it. Welcome, welcome, welcome. Okay, so Brian is coming in, let's see, Messenger. And we are going to have Emily here in just a second. So it's all coming together. We all like that. So.
I'm here.
Oh, there she is. Hi, gorgeous.
Hello, guys. How are you?
We are better now that you're here to brighten our day.
Oh, stop it. It's cloudy and raining here. Wi-Fi is acting all choppy, so I don't know if I'm going to stay connected the whole time. We shall see.
Well, do what you can, honey. May the force be with you.
And it's Friday, and it's 5 o'clock somewhere, so I think a margarita is calling my name somewhere.
Sweetheart, after the day I've had, I could suck the alcohol out of a deodorant stick. Anyway, happy Juneteenth, which apparently means that Chase Bank closed at 1 o'clock when I got there at 1:15. Didn't know that was a thing. So,
okay.
Yeah, fun times, right? But we just decided, so I don't know if you guys have seen my live earlier today, we actually just bought a car to show the kids the basic principles of flipping. So I was able to find a 2012 Jetta from a friend who's a mechanic who wanted to support our house. So we found a Jetta that was worth a 2012 75,000 mile Volkswagen Jetta. We're buying it for $5,000. I had done the research. From what I could see, the property or the car was selling for $9,950. Same 2012 white, 7,500 miles here in this area. So clearly for $4,950 more than I'm buying it for. So we can sell it. I've got to hold it for a month, and I can turn to Carfax and sell it. Okay, so then I would make we would have a profit margin of about $4,000 and some change, depending on what we work on. How cool is that? So the kids have now learned how to identify an opportunity, how to acquire the opportunity. We used investor funds to take that down, and we're splitting the profits with our investor. And they're learning how to detail and do the work to actually get it going. So there's a whole lot that can be happening. This is to train them to get ready for bigger things like our larger flip opportunities, which are really, really cool. So I just want to share that with you guys. Just because you're learning how to invest in real estate does not mean you can't invest in other assets. So the flipping game is real. There you go. What do you guys think about that?
Woohoo.
Right? I know. Maybe I'm just the one that's most excited about it. Okay, Emily, you ready for us?
I am, as always. How is everybody doing today? Are we having technical difficulties, or are we on Facebook and all that stuff is going perfectly fine now?
We are also on Facebook. We're good.
Oh, good. All right. Well, guys, as always, I'm just kind of here to give you like a little recap on what's happening in the economy and in the market, and how that affects, what we're doing in real estate, or if you just have other assets in the financial market. So I always like to start off with the jobs report. Like always, this week the numbers have gone slightly down. Last week we were at 1.56 million new unemployment claims. This week we were at 1.5, so it's a slight decrease. But again, like I said last week, prior to the pandemic, we were in the 220,000 levels, and we're still in the 1.5s and the millions of people still filing for unemployment claims. So let's not forget about that. But it is going down every week. It's been gradually going down week after week after week. So that's a good thing that people are, people filing for unemployment claims are going down, but the unemployment rate is still very high. And we shall see whether there will be, people being able to get back into work once the economy starts to open back up again. What I did want to talk about specifically related to real estate this week was all the housing reports, because that comes out every month, the second week of the month. So we had, we had housing numbers come out this week. We had building permits come out this week. So I'm kind of gonna go through them individually and just kind of give you guys what we were looking at.
Schedule these come out on, because you've talked about unemployment. You said that comes out the first Friday of every month, right?
Yeah, I will share the link. I use this website called Forex Factory. And I will, if you actually want me to screen share, I can show you guys what I'm looking at. That way you guys can kind of have an idea.
Yes, we can do just that.
And then you guys can actually see what I'm talking about rather than just listening to me talk about it. And in that way, it can actually start to make sense. Let's go.
Do it, baby.
Share. Boom. Tell me if you can see.
Yes, we can.
That. All right. So this website is called Forex Factory, and I'm just going to highlight it and copy it for you guys and post it in the chat. But this is what I go to kind of find out what's happening on a weekly basis so that I can prepare for whatever I'm planning on trading that particular week, right? So not everything is requires, like high level alert, but the reason I love the Forex Factory calendar is that it highlights the things that are important to the market based on like the flag, right? So obviously when the Fed's speaking, it's always going to be a high level, a high impact that could impact the market and that kind of stuff. So if you just scroll down and you can, if you trade or if you do other things in other countries, you can filter it so that you have what's happening in other countries as well. So if you go to this little filter tab, you can actually add other countries that you either do business in, or if you do Forex exchange, Forex trading or whatever, you can kind of see what other countries are doing, because sometimes their news also affects us, but obviously our news affects us the most. So I just kind of usually just have my filters just based on US data that's coming out. So looking at this week on Wednesday, we had the building permits come out. And then we had, obviously, this is why I get my unemployment claims. So if we look at the unemployment claims and I kind of pop open that folder and look at the graph, you can kind of see what I'm talking about in terms of this is where the unemployment claims have been for years and years and years, like right at that 220,000 level. And then of course, once the news of the virus started to come out, we started to inch up. And then this was like that that first last week of March, first week of April, when a lot of businesses started to shut down. So you can see that's where we had the peak, and then we've been declining ever since. But this week we're kind of plateauing. So we want to make sure that we don't see another spike up, going up, back up. So we're just going to keep an eye on that and just going to see what's going on with that. That's your unemployment claim. So this report comes out every Thursday. The unemployment, the unemployment rate comes out the first Friday of every month. So that's different from unemployment claims, because unemployment claims is every single week. Make sense?
So do you expect the with what you're starting to see a plateau, and obviously it looks like the you see the step down like pattern right over there as you're coming through this, yes, over.
Mm-hmm.
But do you expect it to spike? Because what you were saying, it's interesting because we were talking today or last night, Bill and Robin and I, we have a lot of friends who are expecting to get the official termination letter in the mail. Like they're expecting that to happen in the next couple of weeks. So is that like a common thing? Like what are you seeing in the market to support it?
I don't know. I guess that will be more like maybe company specific. I know there was a report out today that Apple was closed some of the stores again today because of an increase in the virus picking up again. So I think that will be more. I don't think that the states or the government's going to come out and force another shutdown. I think that will be more now company decisions deciding on whether to open or close. You know what I mean? But I can only imagine that there probably will be. I mean, it's so hard to tell what the outcome will be, because now we're starting to see the cases go up again. So it's really hard to tell what the outcome will be. But I mean, we can certainly expect that, a lot of, and it's the same thing. Like my uncle has worked for a company for 28 years and he just got his, his papers, and they were just told they're not gonna bring them back. So yeah, we are starting to hear a little bit of that, but I don't know how much of an impact it will have with new claims. But I can certainly imagine that if the companies are starting to have more layoffs, permanent layoffs, that we're just gonna see this number either plateau or start to pick up again. I don't think it will go down if we're starting to see that with companies letting people go officially.
Yeah, that makes sense. That's
Yeah, but this week and last week is what we're seeing now, the market reacting to this news, right? Before, any bad news that was coming out, the market was just going up and up. It was pretty much ignoring what the economy was doing, right? But this week, last week, when the Fed chair spoke and talked about, unemployment remaining high and interest rates remaining low, the market did react to that. And this week, we're starting to see that there is just a little bit of slowdown in what's happening in the market in terms of we're not, peaking up as much as we are. And it could just be taking a break. It could just be slowing down, just kind of, taking a little breather before it continues to go back up again. But, that's the thing, is that we just don't know how the market will react. But the last few months, it has not reacted to any bad news at all. Whether it reacts to bad news in the coming future is yet to be determined. We shall see. So that's the unemployment claims. And then if we go to your building permits. So there's always three numbers when you look at this number right here. Let me see if I can highlight it for you. So when you look at the permits, you always have what the actual number is. You have what's forecasted, and then what the previous numbers were. So the building permits for this month were 1.2 million new permits. Last month there were 1.7, and the forecasted amount was 1.23. So we did come under the forecasted number, but we did beat last month's number. So if you look at the graph, when I talked about this the last time, the numbers really had dropped obviously in March and April, but now we're starting to see a spike come back up again. So we're starting to see new building permits coming in and whatnot. The other one that I wanted to share is the where am I? Building permits and then housing stats. So that number there as well.
So the building permits give you an idea of the healthy economy because it's saying there's activity supporting it.
Right. It's the new permits that are being people applying for building permits. So whether it's your home builders, individual contractors, whatnot, the number is starting to increase, and it went above what last month's number was. So you can obviously see that, with spring and summer and people getting back to work or whatever, the building permits are starting to come back up again. And let's see, your housing market index is another one I want to look at real quick. So this was the number that we were measuring last month to see the number of, let's see, wait a minute. Let's look at the graph there. So this last month and the month before that, we had gone to a negative number, and to this month is the first number that we've seen come back on the positive side. So again, all good signs in the housing market, but like we've said before, with residential homes, we don't know what the outcome will be when it comes to people who are not able to pay their mortgage payments after the break of them not having to pay their mortgage, right? Whether it's 6 months, 12 months, or whatever. We'll see what the effects will be with that. So we're not seeing that quite yet. But again, that's just something to keep an eye out for. I think the area that we were obviously all concerned about was commercial, being that's where the small businesses and everything were affected. So, that's kind of like what to keep an eye on there. But the number here, they were last month, it was 0.93, and this one was 0.97 for the housing stats. And we talked about the building permits. So that's kind of like what's going on with the housing market, to just keep an eye out when you guys are doing your businesses in real estate. Always know that they're correlated with the market as well. In terms of the stock market, it's just doing what it's doing. Like I said, this week it's kind of slowed down, so there isn't much going. Oh, I didn't mean to stop share. I meant to go and actually share my chart here so you guys can see what I'm talking about. So give me 1 second. Let me open it again and ignore all that. Let me just give you something very clean to look at. So this is the actual S&P itself. And just looking at, since the pandemic, this is where we were at all-time highs. So every time you guys hear me talking about, the market has had all-time highs, and then we dropped 30%, and now we're coming back up again, we're still not at those all-time highs. And when we talk about different sectors and, different industries in the market, like hotels and airlines and casinos and all those things, this is the broad market, right? This is the S&P 500. And you can see that, everything that's all the numbers that I just went over last month, and as the numbers were coming out, and there were horrible numbers, horrible unemployment numbers, the market didn't care, it just kept going up and up and up and up. So we're looking at a weekly chart here, but if I go on a day-by-day basis, you can see how the market was reacting every single day, right? So this is the beginning of the pandemic, right? The news comes out and we just drop. We try to come back up again, but the news kept getting worse, drop in terms of the number of cases that were coming out, right? And then we kind of bottomed out, and market started to come back up again, and it's been inching back up ever since, but we are still not back to those all-time highs. And the difference that I want you guys to notice is that, since we hit this bottom, we've just been inching up and up and up and up. And this week we had a little bit of a slowdown, right? After Powell spoke last week, Wednesday, this is where you can see that, okay, now the market is starting to react to the news again, right? And you can see the slowdown. There's kind of like a little bit of uncertainty last week and this week as to, okay, what's going to happen with the new cases or whatnot. Whatever the news that's coming out, the market is starting to react to it this week and last week. Whereas before, it just pretty much ignored every bad economic report. It was just like, whatever, we don't care. Right? So you can start to see a shift of just slowing momentum in the speed where it was going up before. Last week and this week, we pretty much have been just kind of stuck at this range. We're not seeing those daily candlesticks inch up and up and up. So pretty much last week, this week have been flat. So that's why I keep talking about, when you're looking
about how they seem to be divorced from reality. This week, they kind of seem to be getting a little bit of a.
Yeah, exactly. That's exactly right. You put it just right. This week, they're starting to look like they actually are related to each other. Before they were like, I'm not related to you, whatever. You do your thing, I do my thing. And this week it's like, oh, wait a minute. So we are seeing that. So this is what I talk about when I talk about, for you guys who have IRAs and whatnot, obviously you've seen some recovery. If you did not capitulate and sell everything when the market was going down and you held on, and you've seen some recovery back, you're not back to where you were, obviously, when before the pandemic happened, but you've seen some recovery. But this is just a cautionary tale, just saying, okay, maybe we haven't seen the worst of everything. We may have another leg back down again. It may not come back down to the lows where we were before, but it could test some of these other previous support levels that we've had. So again, always, trade cautiously, take profits, have stop losses. If you're a long-term investor, learning how to do covered calls and buy insurance to protect the downside, obviously it's going to be a plus for you during this time. And right now it's kind of cheap to buy insurance. When we talk about, put options and pricing and how options work and how they're priced, when there's high volatility in the market, the premiums are very high. And when there's low volatility, the premiums are cheap. So you can see here and I don't want to get very technical with anybody, because I know a lot of you guys here in real estate, but this is an indicator that measures volatility. So you can see as the market was dropping, right, you could see this increase in market volatility, right? If you've ever heard of something called the VIX, this is the fear indicator, right? You can see there was so much fear in the market as it was coming down. We've kind of come off of those lows here again, but you can see that we're starting to inch back up again into those levels. So when you're looking to protect your portfolio, you want to buy your insurance before the hurricane comes. Buying insurance when the hurricane's already outside your door is going to cost you. You can still get it, but it's going to cost you a whole lot more than if you get it when the tides are low and there's nothing much happening.
Interesting. So you have this, so the stock market measures your emotions. That's what the big indicator is.
It's a fear indicator. So it measures the fear in the market, like how investors are looking at the market. So obviously when everybody is selling, there's more fear, and it increases the volatility, because options are priced on a lot of things, but one of the things that we use is volatility. We use different Greeks, there's delta, there's theta, there's vega. I don't need to get into all of that, but it just measures the fear in the market, right? When the market's going up, there's absolutely no fear, right? If you go back to when things were great, you can just see how it's just like a flat line, right? But whenever there's news and the market reacts to the news, it's going to increase volatility, and it's going to bring fear into the market, where you just have a huge sell-off, right? And then it kind of levels back off again. So when this is happening here, this is where we tell investors it may not be a bad idea for you to just get some protection. And remember, insurance is there as a just in case, right? You don't want the market to crash. You don't want your cell phone to get lost or be damaged, but you have the insurance to replace your cell phone just in case it happens. You don't have car insurance because you want to crash. You have car insurance because you don't want to crash. But if you do happen to crash, you want to have that insurance to pay you so that you can go get yourself a new car or get your car repaired. So it's the same thing. When you buy insurance, you're buying it, as a precaution. If the market does not crash, yes, you'll lose your premiums on insurance, but your assets are still going to be going up. You want to protect those assets from the market going down, which is why we buy the put options.
Interesting. So does this represent any previous trend that you saw in the market? Like, because I know when you look at your graphs, you look for patterns that you can recognize, that's the only thing I understand. When you're at okay, I'm visual, I get it. Up, down, 2 up, 1 down. It's a foxtrot, whatever. But like, what are you guys, this looks so different. So does this represent anything in history that you guys have seen that you know of?
Well, no. I mean, even if you go back to 2008, if I can go back as far as I can go back, let me see if I can change this and go back. Oh, let's go 20 years. So even if we go back to 2008 levels, right? When the housing market was starting to peak, right? So in the market again, we always talk about the market is always forward looking and the economy is always backwards looking, right? So the market, this is, let's see, this here, I'm highlighting February of 2008, right? So you can see that the trend had shifted. It was no longer going up right here. Like this was the momentum leading up from the dot-com bubble, right? So if you go back, you can just see how the market was going up, going up, going up. But what we look for as traders is we want to look for those shifts in momentum, where you can see this was a huge run up here. This was a slower run up here. And then it does what we call a double top, where it tries to break out of, the previous high over here, but it fails to do that. And it kind of falls back off again. And then you look for those key support levels and look to see if it's going to break those support levels. And when it breaks those support levels, then obviously the market is telling us that it's turning around and it's no longer going up. So in 2007 and 8, you know, traders and investors were able to kind of see this shift happening slowly. It takes, you know, it takes months for this to happen because this is a weekly candle. This is a weekly chart. So each candlestick here represents 1 week, right? So if I zoom in, this is the week of July 23rd, 2007, all the way down to 2008. By the time, you know, the average consumer hears about it, we hear about it here, right? When Lehman Brothers goes out, or when IAG and it's starting to hit your regular, you know, news channels, your Fox and your NBCs and all that stuff. This is when consumers hear about it, right? But investors have already taken action. When you see this momentum slow down, investors take action and protect their assets here because it's no longer giving you that uptrend. So by the time we hear about it, this is where we're like, oh my God, let me go check my 401k. And at this point, you've lost, you know, quite a bit of money. And then you freak out and you sell, and then you just see the market go back up again because the Fed comes in and prints fake money, and market goes back up again, and then you miss out on that whole entire ride up. So what we look for as traders is just those patterns. What we didn't get this time around, we didn't get that slowing momentum. It just happened like boom, right? We didn't have any warning at all. It was like, okay, we're at an all-time high, and then whoop, right? So when we talk about the speed of the market, this is what we're talking about. We'd never seen this before because we didn't even get that like slowing momentum of like, all right, stuff is starting to slow down. We just got virus breakout and then boom. So we have not seen that before. At least I haven't seen that before. I've only been trading for 5 years. So I, you know, but I'm, you know, just from my mentors and the coaches and the people that I'm surrounded with, they have never seen anything like this before, right? So now we're just.
Do you think we're in a double
that.
peak right now? Like, do you think this is going to be that next double peak?
I don't know. I mean, the fact that if I go back to like, let's go back to a daily one here, the fact that this was an old support level here, right? And we tried to break out of that last week and failed. Obviously, we're not going to have that V-shaped recovery that we were all looking to, that people were suggesting that we would have as like a complete V-shaped recovery. The fact that we failed to break out of this old support level here, and now with you know the market reacting to the news coming out, it could be. I have no idea at this point. All we just do is just trade price action and just trade what we see. So if the markets turn bearish next week, I'll be trading bearish next week. But this week I was trading, you know, upwards, and then, you know, whatever happens next week, we just change our posture and just trade bearish. But it's, again, it's always two different hats that I'll make sure that I want to specify with people when I'm talking about trading versus investing, right? I'll take price action and I'll trade anything that I see. I don't care whether it's up or down. I'll trade whatever I see. So if the market gives me a bearish signal next week, then I'm just trading bearish. If it gives me a bullish posture next week, I'm going to trade bullish. So I don't pick sides. I just go with the side that wins every week. But if for long-term investing, the people that have 401ks and IRAs, you know, if you did not have insurance, or if you do not know how to protect your portfolio, you've been kind of given a little bit of a gift here where the market has kind of come back to almost those all-time highs. Learning how to protect those portfolios and being able to at least look at the chart and see what's happening. You don't have to be like a genius to kind of look at the picture and say, okay, something is going up or something is going down, right? So even if you just visualize and say, okay, how much risk am I willing to take to the downside before I do something? Are you willing to risk 5%, 10% of your portfolio before you jump in and do something? Or are you in it for the long haul? If you're in it for the long haul, then you're just going to experience all those highs and lows throughout the entire time that you have those assets. But, you know, savvy investors are not just going to watch their profits of Apple or Microsoft or Disney go down. You know, when the markets go down, they're going to step in and do things like buy put options and cash flow on those assets. The same way the real estate investor will buy an investment property and rent it out for cash flow. It's the same thing we will do here.
I have to say, I love having you teach. Guys, if you don't know, Emily's actually a mentor. She actually mentors people on how to trade. So if you're interested in actually learning how to trade and take care of your own, take care of your own accountability. So you
right? Financial education.
Yes, financial education. Emily is available. She does in stocks what I do in real estate and better. So just saying. Well, the market might be bearish or bullish. You are a leopard, baby.
And I'm gonna throw another shameless plug because I am here and I still have the mic. I have not handed it back over to you yet, but there's the link for the Forex Factory. I'm gonna put another link on there for the ladies. I think we had a few of us join us last time, but tonight I am having another Women in Trading webinar. So I will post that link for you ladies tonight if you want to join me tonight. It's, you know, there's no charge or whatever. You guys can just pop in there and just kind of see what we do on the financial market side. But again, it's no different from what we do in real estate. It's always about, you know, risk management, understanding the different strategies. Some strategies work in certain seasons and some don't. So it's the same exact process. It's just, it's digital. So you can't touch it, you can't feel it, you can't see it, but it's the same process. So hopefully you ladies are able to join me tonight, and I will post that link on the Zoom chat. And I'm also going to post the link on the Facebook Live so that you guys have it on both sides. And now it's back to you, Jake.
Yeah, Steve Andrews says inverse ETFs are an effective vehicle if you're not comfortable with options. I have no idea what that means, but it's Steve Andrews, and he's sometimes.
Oh, Steve. Oh, hi, Steve. He must be on Facebook. I'm looking at you guys on Zoom, so I can't see what's happening on Facebook.
Yeah,
Yes.
I'm going back and forth just because, I just look kind of whatever today. I have been working my assets off, dear Lord. So, but we're making it work. So yes, everybody, Emily, I love having you on. It's always so interesting because I do see a lot of, I can plan more about my real estate investing based on what you share with your stock investing, which is so interesting because with something that's interesting when you talk about the market being forward-looking, the economy looking backward, is very interesting because mortgage applications are now at a high again. Like we've seen more people applying for mortgages than we have in a while. So we're seeing, because money is cheap and people are trying to buy, so people want to do that. However, lending is getting tighter and more restrictive. So again, that's kind of the dichotomy between the two. It's like, well, guess what? Yes, you can borrow cheap money. Now, here are all your rules. It's just interesting to see how it plays in with what you're doing in the stock market. I find that interesting. Anyway.
Oh, my pleasure being here. I love coming out here on Fridays and hanging out with you guys.
Hey, Emily, have you ever invested in tax liens or deeds?
No, I have not. I'm looking forward to doing that.
Well, are you ready to learn about it?
Well, let's learn.
I think it's about time. Everybody, please welcome our friend Brian Yen to the stage. Hello, Brian. How are you, my dear?
Hey, everyone. How's it going?
Well, that was a lot of face just for a quick second. Then it pulled away. We're like, good. Wonderful. Hi, honey. Welcome to the investor party.
Thank you. So hopefully everyone's doing all right. I'm assuming most people are curious but don't know too much about tax liens or tax deeds.
They're all virgins, honey. They have no experience whatsoever. It's like right before Catholic prom.
I don't know. I've known a few Catholics.
I didn't go there first. I'm just making sure everybody knows that. I might have opened the door, but he went there, which is wonderful. So, Brian, yeah, most people, why don't we start by, well, everyone wants to get to know who you are first. Because they're like, oh, who is this handsome devil on the screen? Not Jacob, the other guy. And talk to us about, like, when you started investing and why did you choose tax liens to get started with?
So when I first started with Legacy, I took a lot of the same classes, wholesale, lease options. We took properties and probate, which got combined. And then, of course, the tax and asset protection class. My partner and I, worked the strategies. I think we got 2 deals done in the first 18 months. But then we were always constantly going to our local RIAs. We were meeting new people. We were talking about, like, hey, this is what I'm doing. What are you doing? And just kind of exchanging ideas. Our local RIA put on a couple of 2-day workshops as well. So we learned about the foreclosures process specifically in California. And we learned about tax deeds in California because California is a tax deed state. So they don't sell liens, they only sell deeds. And it was that workshop for tax deeds that kind of opened up my eyes because everyone talks about what strategies are best, what should they do? And I tell people that there is subtle differences between different strategies. Knowing how to do multiple strategies is great, but also understanding where your strengths and your weaknesses are and working with them, because like when I took the foreclosures workshop that weekend, it was actually taught by a really well-known investor. I don't know if you've heard of him. His name is Warren Racine, and he does mostly foreclosures investing. He's been doing it for going on 45 years, primarily in different counties in California. He's written multiple articles about it, and I was lucky enough for him to teach the workshop. That workshop, I actually found a pre-foreclosure property based on what we were learning, like in the evening between sessions, and I put the property under contract, and I actually found someone who I wholesaled the deal.
You wholesale. You wholesale the deal.
I put the property on. Yeah, I found a property in pre-foreclosure through the foreclosures research that I was learning that weekend. I personally didn't want to rehab the property, so I sold the paper.
Okay. So does everyone know what that means? So let's break that down a little bit for those who are still relatively new to this process. Yes, that's right.
He signed it.
He has signed it. Yay! We're getting somewhere. So it was another way of him looking for distressed property. Now, when you're doing tax liens and deeds, we are teaching through most of Investor Party that deals are people, that leads are people, there are problems that need to be solved, and you want to deal with the people. When you're doing a tax lien, you're buying someone else's problem in hopes to fix it or resolve it. So either you're going to make money on your money, or you're going to get a property or an asset for pennies on the dollar. Tell us about that deal, because you assigned that deal, right? So you made a profit out of putting it together that weekend.
So that weekend, there was a foreclosure workshop, and the point of the story was this. I got through the workshop, I made money using the strategy, but I went home feeling like I put in 16 hours in a cubicle. It felt like work. A couple months later, the same RIA put on a tax deeds workshop, and it felt like fun. It felt like the research, it was more research intensive, but it suited the way that my brain works. So it didn't feel like I had to follow steps and follow a recipe and do all this stuff. It was almost like the strategy resonated with me. And whenever you enjoy something that you do, it doesn't feel like work. So that was how I found that I prefer tax liens and tax deeds investing versus, for example, foreclosures. So from that, I pursued tax liens and tax deeds way more. I put all of my effort into it. I looked for mentors in California, other investors from different RIAs that was their strategy, and I basically created relationships with them, and I mentored with some of them. Now, for people who don't know how to invest in tax liens and tax deeds, the foundation is this. In every state charter, the state gives each taxing municipality, usually counties, the power to set property taxes, because those municipalities or counties are responsible for, in turn, creating roads and schools and fire departments, police departments, and parks and things like that. So they give the power to the counties to tax property owners to basically get the revenue to do those things. In the provision is, if a property owner does not live up to their obligation of paying those property taxes, it gives the county a way to get the money somehow if the person just refuses to pay. Now, there's a difference between tax liens and tax deeds. Tax liens, it's just an IOU, okay? So the county will slap an IOU on the property, just like your mortgage is an IOU. It's a mortgage is a type of lien. So the county will say, you owe us property taxes for this year that you didn't pay. They'll slap an IOU on it. Now, they're going to start calculating penalties and interest. The states that decide, like, I need my money sooner, will say, well, I've put a tax lien on the property. Now I'm going to sell the tax lien for the money that I need, from the county's perspective, the money that I need to make me whole. Because the counties, their budgets are time sensitive. They can't afford to wait around forever. they need their money because they have people that they have to pay.
There we go. Fire department, and especially in California, you guys need to pay your firefighters all the time, right? So that's where this money
Well,
comes
you definitely don't want to give them reasons to go on strike,
from.
especially during fire season. You know what I mean?
Oh, God. Yeah, that makes
So
sense.
yeah. So what they'll do is the county says, well, in the state charter, there's a determined interest percentage, and the interest percentage is usually pretty high. Like, for example, like whatever a bank will pay you for your savings account or CD, it's like lately it's been like, if you're lucky if you get about 1%.
Mhm.
The lowest tax lien interest rate I've seen is 8%. So you're talking like,
So hold on, let's talk about this.
okay,
So you're saying if I want to save my money, like everyone tells us to do, and I'm going to put it in the bank, which might be giving us 1% right now. We're not even factoring in inflation or the fact that the government's
of course not. No, yeah,
right. Like we're not factoring all that stuff that's happening right now. No.
right.
I mean, McDonald's hamburger in 1976 is completely different than what it is today. That's why it's $2.50 versus 25 cents. But we're not going to go there. We're not going to go
No.
there. But if you
We're not
put
gonna
your money in
complicate.
savings, right? Say you
Mhm.
have, let's make it an easy number, $10,000, for example.
Sure.
You have that in savings right now, making 1%, which, by the way, you're taxed on. But
Right.
if you were to take that money instead, and you bought a tax lien, and the lowest percentage you saw was 8%.
8%.
Huh, guys. Well, never mind. I'm just gonna keep saving my money. That sounds smarter.
I think that covers inflation and then some. So
A little bit.
Yeah.
That's
Just
what we
a
call
little bit.
financial intelligence. I'm just
a little
saying.
bit.
Whatever. Moving on.
Right. So the county will say, I'm willing to give up the interest rate that I'm entitled to in return for the timeliness of getting paid. So they're willing to sell the tax lien to an investor and then give the investor the interest once that person pays. The guarantee is that if the person doesn't pay within a certain period of time, for the technically minded, it's called the redemption period. The homeowner has a certain amount of time that they're allowed to redeem the lien. If they don't pay it off, then the county, just like if you don't pay your mortgage, the lien holder, the mortgage company, has the right to foreclose. As the investor, I would have the right to say, like, hey, this lien is due, I haven't been paid, and then you can actually initiate foreclosure and take possession of the property.
So,
I will tell people.
He was making money while waiting to see if someone else is going to pay them back. So at the very least, he's getting his money back plus interest, or he got the property at a severe discount. Does that make sense? Cool. So literally, he'd be walking into the property with equity.
Right.
Follow?
So there's a couple of things to keep in mind. Number one, a tax lien or a tax deed, because it's mandated by state, it's at a higher level of in the hierarchy of liens. It's at a higher level than any mortgage. So if you foreclose on a tax lien, any existing mortgages are wiped out. There are some exceptions. For example, Pittsburgh, Pennsylvania, they actually have a city ordinance that allows the mortgage to survive, which is why I don't go to Pittsburgh. I just don't want to deal with it. So factors like an existing mortgage or mortgage balance that can affect other people, like wanting to buy a pre-foreclosure or whatever, doesn't become a problem for me, because if the property goes all the way through to that process and I end up taking possession, the mortgages are wiped out, because they're notified just like everyone else that a senior lien is being exercised or foreclosed. If you want to protect your position, do something now or forever hold your peace. Which is nice. It takes a lot of the risk out of it for us. But the flip side to that is, don't expect to get the property on liens. That almost never happens unless it's a really, really bad property and there's no reason to keep it. For example, swampland in Florida. gets traded off all the time.
Mm-hmm.
People don't know what they're buying. They don't do the proper research like I was taught. And then they end up finding out it's a piece of unusable land. They can't sell it. They can't build on it. They are not going to pay property taxes on it. And then they become the next round of, tax liens and foreclosures. So know the property. It's got to have value. People have to want it. It's got to have value and usability. Therefore, if the previous owner can, they're going to redeem it, especially if it's a personal residence. A lot of times it's either inherited properties or investment properties that they can no longer afford, and they just kind of let it go. But the thing is, if the interest rate is low enough, people can manage to come up with the money. They can take a loan or whatever. So I tell people 99.9% of the time, you buy tax liens for the interest rate. Don't count on getting the property. If you get it, that 0.1% the time you actually get it, it's a grand slam. It's a nice windfall. It's great. And it does happen. In the last 5 or 6 years I've been doing this, it's never happened to me yet. But, but the thing is, I was never disappointed because I never expected it. I knew what the odds were. I knew it was low because, for example, why would you lose a $300,000 house over a, $2,000 to $3,000 tax lien? Why would you lose $300,000 house for $3,000?
So
right?
that's an interesting thing too. Like when you just said something, and I'm actually gonna take this a different way because I want people to start changing their perspectives on certain things. Like you said, it's the interest rate that matters. So if you have the ability and you are able to take out a loan, like you said, so say you had you took out a loan at 4%, right? And then you have like a HELOC because it's fairly low, or say 6%. That's what it was.
Okay.
Now it's less. But then you bought a tax lien that's paying you 10%, which is pretty common. You made 4% spread there, guys, on someone else's money. What else could you guys utilize to buy a tax lien? And all of you have them.
IRA. Oh, credit card.
Credit cards.
These are some of my credit cards. I've got more. But the point is, yeah, I know, scary for a lot of you. But what if you got a 0% interest rate credit card for 24 months, right? Brian, what is the average length of your the average hold time that you have for redemptive before redemptive rights are done for your tax liens?
Every state is different. Like, I'll tell people I have no problems with this whatsoever. My favorite state for tax liens is Maryland, because they have a 6-month redemption period. So I can foreclose as soon as 6 months. But if I want to keep accruing interest, I can let it go as long as 24 months. And if they haven't paid me by the 23rd month, I initiate foreclosure, which usually forces them to pay me, and they have to now pay me 18 months worth of, usually 18 months, and next 18 months worth of 18 months worth of interest. And in Maryland, it's 18% interest. I'm making 1.5% per month.
So did you just realize so if you did buy that lien on a 0% credit card and you're making payments, I know you have to make payments for the 24 months, right? For the 23 months, right? And your introductory offer expires in 24. I'm using this because I know you guys have seen these offers and all that
I don't need
spam
to
mail.
worry about that.
We all throw it away or spread it or whatever, blah, 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 blah. But if you do that at that time and you're trying to say, okay, the 24 months in, we're gonna start the foreclosure process, they gotta pay me back, you literally just made 18% on money that you borrowed. That's an infinite return for you guys. Now, does that take education? Absolutely. But is it doable? Absolutely. So Pamela has her hand up. I know she's been over there asking, ready to go. Pamela, what's your question?
Are you finding, like, I'm not sure if it's more on the liens or not, that there's no mortgage? Because most lenders know they have to pay the taxes on the property, otherwise they lose their leverage.
Right. So usually the thing is, people usually pay both, right? If they're going to let go both, they're going to let go both. But sometimes people don't have either the awareness or they don't care. Like, they're conditioned. I have to pay my mortgage. I have to pay my mortgage, and then they either forget about their property taxes, or it's not tied in. This was actually the reason why, after the '08 debacle, a lot of new mortgages, they required that the new mortgage companies required that for all new mortgages, you have to establish an escrow account, and they will pay your property taxes for you. They'll bump up your monthly payment, and every month they'll set aside a percentage of that, and they'll pay your property taxes for you. Because the banks are trying to protect their position because they didn't before, they lost their positions. They lost because they couldn't afford to pay the back taxes because they had so many other REOs coming onto the books that they weren't liquid enough. So they had to lose them completely.
Yeah.
But there's also tons of properties that don't have mortgages on them.
Yeah.
You know, properties that, either were probate issues or just, if there was no probate, it was straight inherited. Vacation homes. Like, I still have friends that I don't know why, despite my best advice, keep buying properties all cash. And then they think, because they think that it provides them with better security. And
there is actually a whole fraud thing going on, that people are actually getting the deeds changed on all the ones that are owned outright by people instead of by like a trust or have a mortgage on it. I mean, I don't know about in California. In Florida, it's been it's crazy. It's better not to own it outright. You know what I'm saying? There's some protection.
Yeah. Right. So, I mean, there's always, these are all things that I consider to be market forces. But the really cool thing is this: if, for example, there is an issue with that kind of stuff that makes title to properties in Florida kind of murky or expensive to untangle once you take possession through a county auction, I have 49 other states I can go to. And every single one has a couple of hundred counties, and every county has an auction. So, there's certain states that are liens states, certain ones that are deed states. So they either sell one or the other, not both. There's a handful of hybrid states, Florida being one of them. Florida, I love Florida. So if I just want to get paid a really good interest rate, I'll go to Florida and buy liens. If I want to secure properties for a really good price, I'll go to Florida, but I'll go to the deed auctions instead of the lien auctions. They're two separate auctions.
And so what's interesting about what he's saying here is the auctions, there's a stage right before the auction where, as a nonprofit, this is what we were talking about a little before, Brian.
I was telling you because, you have a distinct advantage.
I don't know where that came from. I didn't think that through at all. Actually, I really did. It's total happenstance. I got really lucky, and I'm capitalizing like crazy on that. Are you kidding? But I have to be in operation for 2 years. However, if you have a homeless mission and you're a nonprofit, you can actually get in before the auction and buy the deals at offer, right? At the offer price, right?
Yeah, at opening bid. At the lowest price possible.
How many of you happen to know someone who does that?
If you ever want to own properties in California for your foundation, I have a really good county for you to go to. It's right on the ocean.
Girl, yeah. So I'm ready. Let's go.
Ventura County. It's my home county where I grew up. Ventura County, California. I know the county commissioner. Like, I got skunked on the last 4 auctions because the nonprofits came in and they took up all the properties and they canceled the auction literally the day before. They said, nope, our properties all got bought by nonprofits. We got nothing else to auction. Bye-bye.
Jacob, we know what we're doing, huh?
Yeah, exactly.
It's amazing how you can just fall into knowledge. It kind of happens. Like, oh, look, I try this. But it's really cool. But why? But this is something interesting. Why do nonprofits get a piece of the pie before an auction? Well, let's talk about it. When you're at an auction, it's a private auction, right? Who owns a nonprofit? the public. Nonprofits are actually owned by the public. So the public gets a chance to take care of things before a private investor or individual. So that's one of the reasons. That's the clearest way I can describe it. Would you like to add to that, Brian?
No, I think it's a wonderful unfair advantage.
Well, honey, you too can start a nonprofit. Like, I'll give you the link.
Or we just partner up.
That's what I'm saying. Yes, honey, that's what I'm saying. And then we get these things, we put them under contract, and then we assign them later. Some states you have to own them for a certain period. I don't know, whatever. But yes, I married a partner. Let's go. I did my work.
It's wonderful. It's actually all you have to do. All you have to do for most of these, because the county does the foreclosure, and the county, of course, never takes responsibility if they screw up. And I've seen people, like, they typoed one number on the property ID number, so they sold the wrong property at auction. Stuff like that happens. It's not a big deal other than you wasted some time, because you get all your money back, they take the title back, and you're like, all right, I got to go look for another auction. You don't get hurt. You lose some time and some effort, but again, not a big deal. People get upset about it, and they try to sue the counties and stuff, and I personally don't care. The thing is, you have to know what type of deed you're getting. A lot of times it's a tax deed or a sheriff's deed or whatever they want to call it, but it's not a warranty deed. So what I do is I always have an attorney right there waiting. The day that I win the auction, I let my attorney know, here's the receipt I got from the county, go to work. And all we do is we do a quiet title action. There is a company called Tax Title Services. I think they're out of Illinois. I can't remember. I met one of the representatives at a function in Vegas. And what they do is, these guys are all title guys. They know the tax process really well. So what they do is they do research. They do research on the county, because some counties do due diligence better than others. And if the county did a good job, they will find a local title company that will give you title insurance right away. So you can flip the property if you want. Mm-hmm. And they will guarantee, they will issue the title insurance, which of course puts a warranty on your title. So even if something goes wrong, the insurance takes care of it. Because Jacob knows, right? Title insurance is a big deal.
It is. It's actually interesting, guys. On Monday, I'm going to have Brandon on. He's going to be talking about a suit to quiet title, which if you guys don't know anything about, which most of you don't, that's definitely more advanced. But I want you to remember this part now, so it's going to help you play a role on Monday. But that was not planned, so I'm glad you're bringing it up. So when you get a title, and actually I'm supposed to have my title agent on, she's had to reschedule a couple times, but she'll talk about what title insurance is, what it means to, what is title and things like that. But so you're saying you'll be able to go and you'll be able to use services like this, and if it's a good county, they'll be able to get title insurance now. So if the property is, or the transaction has issues on the line, you're still paid out from the insurance.
Yep, still taken care of.
So that is what Emily would call smart.
Which is also,
Absolutely.
a quiet title action, as though some people, on a number basis, can still be seen as a cumbersome cost. I think my last one I did cost me just under $4,000, but it was on a property that was worth $300,000. So to me, it was worth it. For people who focus on the $4,000 and not the $300,000, you're looking in the wrong place.
You need to get financially educated.
Right. But with the tax title services, it's like $2,000. It's like half. It saves you a lot of time, because what they do is they go through and they document everything that the county did. They put it all together, and they put together a title insurance package for you. As you guys get into it, you'll see why, because it allows you to turn around and sell the property with greater peace of mind. So that's what makes, and it also assures the buyer that if nothing's going to go wrong, but on the off chance it does, you're covered. And that's why you attract more buyers that way, and it allows you to exit the property much more easily.
So, and also if you guys do this, say you do it, you get a quiet title, and then you're signing the deal, because you can do that. If you put all that together, can you ask for a higher assignment fee? Absolutely. Why? Because you're protecting yourself and you're protecting your buyer. Because remember, your buyers are your partners, and you want to do deals with them on volume. So it's not just one transaction. You wanted to build that relationship. You want to make sure it's like secure and legit and everything that goes with it. So you never just want to think, okay, you're a buyer for this transaction, never talk to them ever again. It's about that relationship. So learning how to do things like suit a quiet title or getting a quiet title. If you can get a warranty deed, you're awesome. Because that's the only one that's actually guaranteed, but that's not as common. But when you have a quiet title, you're golden. That's great. That means, okay, from this point on, this property won't have any properties. Go. This property won't have any problems. Yeah. Move on.
Well, a quiet title is exactly that. That's what the name means. It means from this point on, the title is quiet. It means nobody in the past can come and dispute it. A judge has looked at the case and said, this title is quiet from now on, no objections, will be valid from this point forward. That's all the quiet titles. It quiets the past of the titles, so nobody from the past can show up and dispute anything.
It's like pouring, I just got done watching Hocus Pocus, okay? So thank you, Michael and Brian, for appreciating that. So it's just like when you pour the magic potion or whatever over the graves so the ghosts shut the hell up. It's just, it's now a quiet title. You're good to go. Like, it's funny. But also something that's interesting, which I did not know, when you go and you can get the list from the city and from the county of what's available, oftentimes those deeds will be things like alleys or ditches, and you have to really know what you're buying. Like, you have to know it. Otherwise you'll be the proud owner of a good 40-foot ditch that's this big you can't do anything on, but good for you. You still have to pay taxes.
I've seen easements. I've seen runoffs. Florida swampland, of course. I've actually seen this. So the parcels in this one city were really, really narrow. I don't know what they were originally for, but it looked like they were for side-by-side single wides. They were like really, really narrow parcels of land. So every house in this subdivision area was on 2 parcels. So half, like the property line. So each person, when they bought the house, it came with 2 parcels, because half the house was built on one, the other half was built on the other. They literally built it because the parcels were so narrow, you couldn't build a house on it. So they bought 2 parcels side by side, they built a house on it, and sometimes they'll pay the taxes on one side and forget to pay the other side. And I used to joke with my partners, like, so can we buy the other half and then go into their house and build a wall right through their living room and say, like, if you want to use the other side of the house, you have to pay me? And then the lawyer said, no, that's not legal. Just leave it alone. So whenever I see that, I just like, it's really nice though, because whenever you see things like that, when you get these lists, depending on the county, sometimes the list is like 25 properties. Those are easy. But I've seen lists that were like 5, 6, 12,000 properties, and you have 3 weeks to do your research before the auction. So things like that make it easy for me to throw things out. I'm not looking for commercial properties. So every single one that has a commercial property designation gets thrown out. Any property that is like that, that's on 2 parcels and it's not both parcels being sold, I throw it out. If it's a gas station, I'm throwing it out. If it's landlocked, throw it out. I'm not interested, right? I will look at things that are like zoned agricultural, if it's like raw land, but it's zoned agricultural, if it's got access and whatnot, because I know people that want to build on stuff, and it's very profitable to take agricultural land, get it properly rezoned, and build on it, because the value goes up exponentially. I mean, agricultural land is so cheap from a tax perspective.
And it's amazing, especially I love when people spawn me on other things that just give me on a tangent. So I apologize, but I'm also think this is important. So agricultural land, because it's so cheap from a tax perspective, right now, guys, this is the time that we're already behind the 8 ball. A lot of the wealthier individuals are buying up farmland and agricultural land right now for these reasons, because we have so much unrest. Look at the state of what's going on in our economy. I'm not trying to be fear-mongering, but we already know we're coming out to an election, and no matter who wins at that point, it's going to get crazy. So buying up land to learn how to grow your own food, or say you do what Brian does, you buy a lien on agricultural land that needs to be tilled, sold, blah, blah, blah. You buy that land on the lien, whatever you acquire the land, then you can lease that land out to a local farmer, and they can actually grow their crops and you can get a royalty from it. Do you see how that all works together, or percentage of the profits? See how that all works together? So,
Yeah.
and like, it's interesting because like Brian knows people who would buy that stuff, and I know people who would buy gas stations, which is ironic. They are crazy individuals, by the way. Crazy. They're nuts.
Well,
Because in order to, you know what you're getting with an abandoned gas station? A hell of a lot of problems. You got to go there and remediate all that land. You got to make sure it doesn't have any more like dead ducks beneath it, that doesn't have any endangered species dying around. It's like, it ain't okay. Like if they got a rusty pipe underneath the ground somewhere, you're the ones that's responsible for taking care of it. It's risky. They're crazy. They make a lot of money though. They're good at what they do.
They do.
Mm-hmm.
You just have to know how to solve the problem. And
All
I'm
I
happy
know
to
is like you have the problem with oil. You use Dawn, you know, because it cuts the grease, and you can actually pour that on anyone. No, that's what they use in the Exxon spill. No one? Okay, fine, never mind.
No, I know it. I know it.
Thank you. I can't tell who's laughing or not today. Like whatever, Pamela's having a good time. Nelson's probably over there eating. Jessica's hiding again, and Robin is upstairs in the phone call. So okay, well I'm glad we're having a good time, kids.
So
See, you're
I'll give
eating,
you
aren't you?
guys just one last thing to remember. I've gotten a lot of objections from people like, oh, I could never do what you do. I could never kick somebody out of their home. And the personal residences that I come across are very slim, but it's not unheard of. And the way I see it is this. If the person who buys the home but can't maintain it, they can't be a responsible homeowner, then they're hurting not only themselves but their neighborhood, their neighbors. If a property goes to seed, everyone's property value suffers, everyone's equity suffers, and people don't deserve that. But the city also suffers. The city falls behind on their budget. If enough people do this, fire departments don't, they lose their budget, or the city has to borrow more money at a much higher interest rate on a bond just to pay the salaries of the firemen or the policemen, or maintain the roads, or keep the street lights going, or so on. We come in to help the city stay on budget and on time, and that's what we're doing. And then we're also holding the homeowner accountable. Hey, you signed on for this when you bought the property. And the counties understand this. And I'll give you a really good example of this, and then we'll wrap up. In the state of Texas, it's one of, I think, 4 or 5 states that are called redeemable deed states. They sell the deed to the property, so you take ownership of it, but the previous homeowner can still redeem the property after you take possession of it. So Texas is one of the ones where it's easier to keep the property because the interest rate is so high. In Texas, it's a 25% penalty, not amortized, or I'm sorry, prorated, but it's, I'm sorry, not annualized, but it's penalty. So literally, if I buy the property at auction today and they redeem the property tomorrow, they still owe me 25%. So, and on top of this, it's 25%, and it's on the amount that I paid at auction, not the opening bid, not the back taxes that was owed. So say, for example, the property opening bid, they owed $5,000 in taxes. And so the county says opening bid $5,000, 3-bedroom, 2-bath house in such and such a neighborhood. If I win the property at $100,000 because the house is worth $350,000, and I'm saying I'll pay $100,000 for a $350,000 house, in order to get their house back from me, they, depending on whether they file for homestead tax exemption, they either have 6 months or 2 years to get the house back, but they owe me 25% interest, not on the $5,000 that they owed in back taxes, but on the $100,000 that I paid at auction. So they have to pay me $125,000 to get their house back. If they couldn't pay $5,000 to keep their house from going to auction 6 months ago, what are the chances of them being able to pay me $125,000 now to get their house back? So you get the house. So there's not, but even if they did, I made 25% on my money. During those 6 months, I can rent out, I have possession and control of the house. I can rent it out. 100% of that rental income is mine to keep. How am I, how is that a risk? How is that risky from an investor standpoint? Very few strategies address risks like this.
It's actually so brilliant. I love that you just reminded me, you were talking that one of my best friends I say this all the time. When you are first generation to this country, like Rob was, he was first generation. His family's Polish, lived in Chicago. Go figure, Polish, Chicago. Mm-hmm. It's more Polish people than Warsaw. They actually were like, they got into real estate investing. He was very bright. He worked so hard, and he got his first few properties while he was in college. He and his parents got an 8-flat in a distressed neighborhood in Chicago through a tax lien, and they had to hold it for 2 years because they had a 2-year redemption period. And they were so excited that when that 2-year mark came, they went in, they redid everything, and then they have now this 8-flat, which is now a cash flowing asset to them. And they own that 8-flat next to another 8-flat that they also own. So they're starting to take over this block and gentrify the entire area thanks to tax liens and creative financing. So it's just really interesting to see how you can do these things. And one of the things that you also learn, guys, when you're doing tax liens is, say that Brian goes and buys that $350,000 house at auction for $100,000, and he's got a 25% penalty that he can do. So that's the same example, right? Say Brian's there at the auction. He's ready to go. Gavel falls. He wins. That's at 10 a.m. Cool. I'm sitting around having some coffee, watching the news. Who am I kidding? Oh, no, I'm watching Golden Girls. And I'm just enjoying my morning. I get the phone. I say, oh, there's the action. Oh, who is the owner of that? Someone just bought it. Great. I skip trace the owner, and I call the owner. I'm like, hi, Nelson. Guess what? This D-bag Brian over here just bought your house for $125,000. How would you like to get back at him? I'll buy it from you. Your house is worth $350,000. I'll pay you $130,000. That way, at least you get $5,000 out of the deal. Want to do it? Okay. Guess what? Now Brian still gets his 25% on his money. The owner gets $5,000. They're out of the property with something that's better than nothing, and I got a property for $130,000 that was worth $350,000. So a lot of the times when they have that ability to redeem, it's because another investor steps in that has the capital and the intelligence to do things like that. Is that cool to anybody else? Yeah? Thanks. All right.
I don't think Brian's happy about that.
He still made $25,000. He made 25% on his money, right? And
absolutely.
A lot of the times they don't. But most of the times when people invest in tax liens, they don't want the property. They want the interest. They don't want the headache. This is a paper strategy. This raises your net worth because your money is making money for you, right? It's great that way. So that's just an idea. Does anybody have any questions for Brian? Michael, what do you think? I know you've been looking at these things.
Yeah, no, it's very interesting. I did have a question, but it slipped my mind. But I have looked at them here in Florida. Florida, I believe, is the only state that does tax liens and deeds the way they do it. I don't think any other state mimics how Florida does it.
Well, Florida, this is the thing. Most states, they empower them to do liens or deeds, but they only enforce one.
Mm-hmm.
You're right. Florida is the only one that is a true hybrid state where they still do both.
Mm-hmm.
The way that they set it up is because Florida has a 3-year redemption period. Mm-hmm. It's a completely different strategy, and if anyone else gets bored, I don't mind if you drop out. But for Michael, a lot of times you'll see this. People will go to, it's a bid down. So they'll start at like 12%, which is the standard interest rate, and they say, okay, I have a $5,000 tax lien on such and such a property. Opening bid is at 12% interest. Then somebody says, I'll take 11% interest. Then I'll take 10% interest. A lot of people jump it. They'll just go, I'll take 0. The first person to say, I'll take 0 gets the lien. The reason they'll take no interest on the first year is because if the homeowner doesn't pay the second year, before the property goes to auction, the county will call you and say, hey, Michael, we see that you're the owner of lien such and such number. The property owner did not pay the second year. Do you want it? And then you say yes, and then you pay the lien, and you automatically get it at 12% with no competition. And the same thing with the third year. So by the time the third year starts, you now have 3 liens. You own all 3 positions. And once that third year finishes, your first lien has now matured. So you now have 2 liens. One has 24 months of interest on it. One has 12 months of interest on it. The first one has 0. But now you have a position, your first position is mature. If they haven't paid you, you can contact the county and say, I'm the owner of such and such a lien. I have not been paid, and I want to foreclose. And what the county does is they'll take all 3 of your liens, they'll record all the data, and they'll put that property on the deeds list. And it will be scheduled for the next deed auction, and they'll tell you. So the opening bid on that auction is everything that you are owed. So you're owed 0%, but all of your principal on the first lien, the principal plus 24 months of interest on the second lien, and the principal plus 12 months of interest on the third lien. So you'll either get all that money at that auction, and if nobody bids on that property, you get the property.
Okay, gotcha. Yeah, I know they do the liens once a year, but the deed sale is every week.
Yeah, because they have a lot of inventory.
Yeah. So
that can fluctuate, but yeah, usually it's once
on
a year.
average.
Yeah, but what I would recommend is if you're going to do something like that, sit in on a couple. I always tell people, hey, if you want to make cash interest, buy liens. If you want to own properties, buy deeds. In Florida, you're great because you can do either one or both.
Yeah, no, Florida is definitely a unique state, and it's all online here too. There's no courthouse. Everything.
Oh no, I know. I know
Yeah.
a software engineer that created a software to put in his bids automatically while he was on his honeymoon in the Bahamas. He set the app for to run during the auction, and then he and his wife went to the beach. When he came back, he had won 4 properties.
Very nice.
Do you have his number?
He should market that.
I know, right? He's like, nah. Yeah, no, I can't even get his name from my friend who told me about it. We have a mutual friend in common. That's who told me about it. And I can't even get it. He's like, no, I'm going to get it first. If he ever decides to open it up, I get it first. Like, fine. Just send me how much you want for the license.
Is that not fantastic? Did you guys learn something today? Are you getting more and more value out of this stuff? Like we're always trying to find different things. There's always something more. I see Pamela. She's like, yeah, kind of. Oh.
No, definitely. It was great.
Yeah, he's a very interesting and smart man. Brian also was a coach. So he coaches people on how to do this stuff as well. So Brian, how can they find you?
So actually, right now I'm kind of running around. I'm kind of expanding my business into insurance assets right now because I have a broker friend who's asking me to partner and coach his insurance team. So unfortunately, I'm not sitting in front of my computer as much as I used to be. So actually, I will do this for you guys. Hold on one second. I will put this in chat for everyone. This is my cell phone number, and you guys are welcome to text me anytime. This is the best way to get me to respond. Just remember, if I don't have you in my address book, I just need you to tell me who you are in your text so I know what this is about.
And
but
say
yeah.
You're from Investor Party so he knows who the hell you're from.
Exactly. Just give me some context so I know like what what you need, and we can go from there.
So I love having you on. It meant so much when you called me the other day just to check on me and see what's going on. It was just the right time. You're just a great person, and I value you, so thank you for that. And you're also smart, which helps a ton. I don't like being around dumb people. I got the kids for that. Anyway.
Well, everyone's got their charm. I'm like, dude, I spend so much. I just geek out on so many like financial stuff like this that I have to be smart to be charming.
It's funny because you really do geek out. Like I used to be so cool. I used to be like geek and fun and bad. I was so cool. Now I'm like I laugh about the stock market with Emily on Fridays, and I talk to you about tax liens. I'm like, oh my God, I feel like I need a pocket square protector or something. Like it's just, how do I get this to be something better than, I don't know. I'm just such a geek now, but I love it. It's so creative.
You've matured.
Anyway. Would you guys like to have Brian on in the future to give you guys some more insight? You think he learned a lot
Yes, of
today?
course.
You get to know him even better. He's brilliant. So we'll have him back on. He's a great coach. Reach out to him. And he's on Investor Party, so you guys can all have him join in. Guys, you're wonderful. Thank you so much for being here. Monday, we're going to have Brandon Diaz on talking about suit to quiet title and how to calculate a maximum allowable offer. On Wednesday, we're going to have IRA Club. They're going to be coming on teaching you guys how to invest using an IRA. That's going to be a simple, basic one. For those of you in Real Estate Survivor, you're going to get some more high-end things. So I want you guys to understand how to make private money partners out of this. But for those of you just getting started, which are what these calls are for, that's going to get you guys at least open, and we can have more discussions with it. And then Friday, we have someone. My brain's fogging. Who cares? But in the meantime, guys, you're lovely. Mwah, I adore you. Have a good night.
Bye, everyone.
Bye.
It was good seeing you, Brian.
Good to see you too, Michael. Bye, Robin.
Bye, guys. Have a good weekend.
Bye, Brian.
Thank you.